All right, day 16 of my stock market portfolio. All right, so let's start off with the equity in all three accounts. So in my margin account with Questrade, got an equity that is up to 5,100. In my TFSA, I've got an equity up to 50,869. And finally, in my RSP, 16,892. So that's a total of 72,870. So markets had a good rally on Friday, but then took a small drop towards the end of the day. So if you look at American Airlines, it's up to 26.31. So this covered call here at 28 will be a good trade. I've got this one on October 4th that'll expire with a 31.5 strike. This one will probably not be a great trade because the premiums will be low. This one here at 24.5 is going to end up being profitable. I'll get my money back, and I might actually even be able to close this trade early. Might not have to wait all the way to September 27. In fact, last trade on Friday, I could have closed it for 23.84, but my max selling price is 24.5. So I'm gonna wait a little bit more until I get as close as possible to 24.5. But I'm pretty sure I won't have to wait till September 27. So that's good. So going into this trade, I had a profit in mind to make in 30 days. I'll end up making it in less than 30 days. For this trade, I'm happy. Got Bristol Myers here with a 50 strike. Right now it's trading at 48, so it looks like I'm still gonna end up keeping my shares, and I'll try to sell a call premium the following month, hopefully a decent one. So Box ended up going up after earnings, even though before market it was down. I still have a strike of 20 though, so it's still pretty far from the current market price of 14.5. Hopefully I'll be able to sell some decent premiums. We'll see. Really happy with Dell. I mean, my strike is 52.5. The stock rallied back from 45 to 51.53. So right now it's very close to my strike price. Even if it stays below my strike price and I end up keeping the shares, I'll just sell another call premium or another call option at a 52.5 strike come September 20th. And I'm sure it's going to be a decent return. I mean, I could see here that if I try to sell 30 days out from today would be about, I see they only have up until October 18. So let's just see what October 18 would get me. October 18 would get me 2.47 right now. So on a 52.5 strike, that's 4.7%. That's pretty good. EWZ, I can probably close out early as well before September 27. My strike is 37. The stock is trading at 41. So most likely I can close it for 37 before September 27th for sure. So my gold iron condor that I sold this week, I believe I sold for $112. Right now, I'm up about 3 and 8. I'm up about $11 profit, but still not enough to close. So still have to hold on to it. I just need the gold ETF to stay between 150 and 140 come September 30th. But the intention is to close the trade early before, as soon as it starts showing a decent profit. Goodyear Tire, if you remember, my strike is 15, but I ended up selling at a 12 strike because the stock was trading way too low for me to collect any premium. So I went at a 12 strike. I took the risk and sold a strike of 12 to collect $15. Right now the stock is at 11.5, so pretty close to my strike, which is dangerous. Kraft Heinz, same thing. My cost is 36, but I ended up selling at a strike of 27 because I wanted to collect some decent premiums. Right now the stock is trading at 25.5, so $1.50 away from my strike, which I cannot afford to have it go above my strike of 27 come September 20th. This Netflix iron condor, which is actually just me rolling over a losing trade. Looks like I'm going to lose money on this trade. Right now it's sitting at about, I'm going to lose about $500 on this. Nvidia though, beautiful. This is going to be a profitable trade. I can actually close it out early. Could have closed it on Friday for probably a $200 profit, which theoretically I should have done because going into this trade initially, my max profit was $400 in 30 days. I can actually close this trade early for $200 in 1 week. So I'm actually making more than if I hold on to it for 30 days to make $400. but I know that there's a good potential of getting that $200 extra. So I'll just wait a bit to see how close I can get to that $400 max profit. Plus, if I get the capital back, it's not like I have something else that I want to buy. I could just leave it in NVIDIA for now. SNC is still down a lot, but the premiums are pretty high. So last month, the first month I collected about $85. This month I collected $25. We'll see what I'll collect come September 20th. So I've got this vertical put on the SPY that expires September 20th. I need the SPY to be above 293 for me to keep max profit of, I think it's $100 and something dollars, $107. Right now, I'm actually down on this trade. If I close this trade early, I would lose about $70 on the trade. That's because the SPY is trading at 292.45 and I need it to be above 293 come September 20th. So I'm not going to close it early, although if I do, it would be for a small loss and I'd be saving myself from losing max loss of $393. But because I think I still have time, I think the SPY has a good chance of being above 293 come September 20th. So I'm going to hold on to it. I've got this vertical put on the SPY which expires September 13th, so in about 2 weeks. This one had a max profit of $80. It needs to be above 277, and obviously it is trading at 292, so this one's pretty safe. I can close it early, but I'm only gonna be making a profit of about $40. So minus $12 of commissions. It's not that worth it, especially since I just need the SPY to be above 277. So if I'm keeping this one at 293, it doesn't make sense for me to close at 277 early. If I have confidence in the 293, then I should have even more confidence in the 277. So I'll keep it so I can collect max profit, and then the options expire worthless, hopefully, if nothing crazy happens in the next 2 weeks. I've got this iron condor on the SPY. This one's a little bit troublesome because of the call side. So I'm not worried about the put side, which is at a 275 strike. In fact, it's already showing me a profit of about $40. But the call side is showing me a loss of about $25 because my strike on the call side is 300, and this iron condor expires September 23rd. So still 23 days remaining. And as you can see, the SPY is trading at 292. So there's a good chance that the SPY ends up above 300 come September 23rd. So this trade, I definitely need to close early, but I'll wait until it shows me a better profit. Now, if it starts to go against me on the call side, that's where I need to do an adjustment, but not sure exactly what type of adjustment I'll make. I know I'm not going to hold on to it till September 23rd. So most likely I will end up buying back the call side and then either selling another call credit spread a little bit further, let's say at 303 or 305, and then I'll sell another put credit spread a little bit higher as well to compensate for the loss that I'll be making by closing out the call side early. So my Tesla put credit spread is doing well. This was a max profit of $100. It expires September 20th, and I just need Tesla to stay above 200. Right now it's at 225, so it's got a good chance for me to make max profit. I could, because Tesla is a stock, it's not an ETF. I know that it could move 20 points or 30 points easily in a week. So if I have a chance to close this trade, early for a decent profit, I would take it because I know anything can happen with Tesla. So my max profit is 100. If I can close it for $30, I'll close it for $30 and keep the $70 profit. Minus commission of $12, so that's $58 profit. But obviously what I'm looking at is the return. Is the return $58 divided by 400? That's 14% in about 3 weeks. Uber is a covered call trade that I bought at 40. I ended up selling another call option at a 40 strike, expiring October 4th, only collecting $25. So the first month I collected about $200. The second month I collected $25. Zillow looks like it's coming back up. So When it went down, it was because of the general market, as expected. Got a strike of 34. The stock is trading at 34.4. So right now I'm safe. Looks like I'll be able to make max profit on this trade. AMD is going to be a good one as well. My strike is 28.5. The stock is trading at 31.45. So it looks like I'm going to end up making max profit on this one as well. And also, most likely, I'll be able to close this trade early. I don't have to wait till September 27. As soon as the options decay a bit more, I'll be able, as soon as there's no more time value in the premiums, I'll be able to close the trade early and collect as much as the max profit as possible. And I could see here that on Friday, the last trade would have given me $28.15. My max selling price is 28.5. So I could have already sold it on Friday at 28.15 instead of waiting till September 27th to get an extra $35. So probably on Monday's close. So probably on Tuesday, I could probably close it out early. So I didn't make any trades on Friday, but it was good to see that most of my trades are coming back in the green. So hopefully I can make some profit, get my money back, and apply it somewhere else. But this time I've learned my lesson. I'm gonna stick to safer stocks or even ETFs. For example, American Airlines I'm fine with, but Bristol Myers Pharmaceuticals, I don't think I'm gonna do it. I don't think I'm gonna do pharmaceuticals again, unless it's Pfizer or Johnson & Johnson. Box, I wouldn't do Box again. Dell, maybe. EWZ for sure. Gold. Goodyear Tires, no. Kraft Heinz, no. Netflix, no. Nvidia, always. I love Nvidia. SNC, I have no idea why I bought SNC. Probably just because the stock dropped so hard, so it looked attractive, but I shouldn't have gotten myself into that type of stock. The SPY for sure is something that I would continue buying. Tesla, although it moves a lot, but it's hard to ignore because it moves so much. I might continue to trade Tesla. Uber, no. Weight Watchers, definitely no. United States Steel, no. Zillow, although Zillow has never disappointed me, but I wouldn't get into Zillow again. I want to stick to more big name stocks like Microsoft, Apple, Facebook. AMD, good. Afria, never again. Bed Bath & Beyond, never again. CHK, never again. FCX, I don't even know what it is. Grubhub, although I like Grubhub, but I wouldn't do it again because it's fairly new and it's very volatile. Halliburton, no. IMGN, of course not. Kroger, no. Macy's, no. Mattel, no. Although they're still big name stocks, but they're not like Microsoft and Apple and Facebook. NEO, no. Teva, absolutely not. As you can see, I bought the stock. I initially bought the stock at 18.5 and right now it's trading at 6.9. So that's why no more pharmaceuticals. Although Teva is a stock on Berkshire Hathaway's portfolio, so that gave me confidence to buy it, but it completely destroyed me. And Square moves a lot, but I like Square. Yeti did not disappoint me, but I would not buy back that stock because I don't want to deal with crazy downswings. So if I had to do it again, I would avoid all these stocks and just stick to bigger names like Microsoft, Apple, Facebook, and then I'd stick to ETFs like the SPY and the Qs, the IWMs, the EWZ, gold, so that I don't end up in a position like Teva where I bought the stock at 18, it's trading at 7. Which strike do I choose in order to sell more call options? All right, so this was my day 16 stock market portfolio review. So if you have any questions or suggestions, leave them in the comment section below. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. Thanks for watching.